Okay, looks like everything is good. Okay, so welcome to the webinar, everyone. This is a two-part series, and the second part is available today as well. I'll just use my MT4. As we go through, I'm going to start asking you guys questions, and the objective is not to identify, but the objective is to identify them again and again and again and again. Okay, that is the only way you get good at something. Okay, now how many of you guys here have used divergence before? How many of you guys know what divergence even means? How about that? Let's use that as a question. Okay, how many no's do we have here? Okay, on stocks, yes, a bit. Okay, how many people are new to the concept of divergence? Of course, in the second part of the series, we're going to get into some crazy methods that you guys, I'm sure, have never seen before. We're going to go really all out on it, but in this first session, I'm going to introduce you guys in a simple and basic way that it's going to change the way you look at the market. Indicator saying one thing, price is saying the opposite thing. Exactly, Samir. Okay, so let's take a look at this. Now, what I'm using here is the stochastic oscillator, and I'm going to show you how I put it up on my screen. So I go to first, I have my charts loaded up. Okay, I personally prefer the 1 hour charts. Is the screen visible for everyone? Okay, so when we look at divergence, okay, this is the one phenomenon that is different when it comes to using the indicators. Now, what are we used to when it comes to using indicators? What do we know when it comes to using indicators? This is how we look at indicators, right? We plot up an indicator, whatever it may be, and we see that, okay, we have an oversold area, which means buy, okay? The most people, when they're starting at forex, look at this traditionally. Okay, overbought area up here, which means sell. Okay? Now, this whole situation, it gets people thinking that, okay, forex is really easy, But the fact that indicators lag, I don't think I need to explain that to many people in here, that indicators lag and eventually follow price. So if price doesn't move first, the indicator is not going to move whatsoever. Price will lead the market. All right, so let's get right into this. Now, for the sake of avoiding confusion between divergence and hidden divergence and the word divergence itself, we're going to use a simple word called opposite. Okay, for the sake of this webinar, from here on out, when we spot a divergence or a hidden divergence, we're simply going to call it opposite. Okay? Now, what do I mean by opposite? What is an opposite? Take a look here. You can see from this swing low, the market went lower to this swing low. But on your indicator, from this swing low to this swing low, the market did what we call an opposite. This indicates a change in the direction of price. Okay, you guys see how the price turns around once you have this sort of situation? Okay, I'm going to get more and more detailed into it as we go. Okay, but first, the main goal is for you guys to identify them. So let's move on forward. Let me show you guys some more opposites that we can deal with. Okay. Would you say this is an opposite? Now we're working with the tops now. From this high to this high. And this high to this high. Do we have an opposite? Yes. Okay. Very good. Very good. Moving on. This is our 1 hour chart. Let's go down to a 5-minute chart. Okay. Some people like smaller time frames. Some people like larger time frames. Okay, now that we're looking at the 5-minute chart, let's see, do these same opposites / divergence exist on larger time frames, or is it also visible on smaller time frames? So let's take a look at that. Okay, let's use this high to this high. Look at your indicator. Opposite. You'll get them all the time. You'll get them all the time. And these are pretty common in the market. They show up quite often. Okay, and they indicate a reversal from where price is. Okay. Now, you will have situations at time where the market will give you a lower low or a higher high, but then your indicator will not do that. It'll probably be like sideline. Okay, that may count as an opposite, but you want to look at that as caution. You're not 100% certain yet. Okay, you don't have the certainty to go with it that yes, it's going to turn around. You don't get that. Okay, so some cautions to be aware of. Okay, you guys might want to write this down if you guys are taking notes. Number one, make sure your opposites occur as close to the oversold or overbought area. Okay, whether you're trading MACD, whether you're doing stochastic, whether you're doing RSI, make sure they're in the overbought or oversold area for all of these things. Number two, okay, never cut through any data. What I mean is, don't connect your this low with this low. You can't cut through these candles. Okay, same thing goes with your indicator. You can't connect this low to this low here. You can't cut through these indicators here. You must stop at your nearest one, or if you have space to move, you can move until the next one. Okay? And finally, step number three, when you spot a divergence or opposite in the live market, do not immediately jump on it. The beauty of this thing, it helps you, it gives you time to think and focus on what needs to be done. Let me show you why I say that. Okay. Let's go to, let's say, a 4-hour time frame. Let's take a look at any random area. Let's scroll back and stop right there. Okay, so let's see, what do we have here? Okay, so we have a lower low. Okay. The third point is do not enter immediately after you spot a opposite. Okay, so when you connect your lower low here, you can see clearly on your indicator that's not the case. We don't have a lower low. In fact, we have a higher low. Okay, that has some sort of significance telling you that the markets are getting ready to turn. Now it is officially oversold. Okay. Now, but when did it actually go oversold? If you take a look at this area, this also is a lower low. This also is a lower low. This candle is also a lower low. How do you know when it's going to turn around? Okay, so that comes to the number one concern of why people jump into divergence, because they enjoy it, it's beautiful, but then the moment they experience it live firsthand, they're like, oh, it doesn't work. And they're very quick, like everything else, they're immediately ready to jump the gun and like, okay, next strategy, let's go to FX Street or, forexfactory.com and let's find the top 10 strategies there, and we'll keep hopping every 3 months. So that's the whole situation that goes on again and again and again with the average trader. Now, yeah, the 3 points, if you guys haven't got that, okay, here we go. We're going to go one more time. Step one, okay, when you identify your opposites, make sure on your indicator they're in the oversold or overbought. You can do this with stochastic, you can do this with MACD, you can do this with RSI or even CCI. It basically tells you what is opposite from your indicator, especially with the moving averages. All of these have moving averages. Okay. Step number two, do not break candles. Do not break any data. Do not connect this low with this low and go through this data. Okay. Same thing with your indicator. Don't go through data. From here to here is okay because you're not going through this middle piece. But don't go to this one like that, and you're going through somewhere over here. Okay? All right. So And then the third piece was do not take the trade immediately when you see an opposite information. Okay, so now take a look at this. When you see this, right, do you guys all agree that this is an opposite? Okay, make sure that your indicators, when they curve, they're almost very parallel to the price where it turns. You see how price is reacting to certain areas? Now take a look at this one. You see how even if you connect it down here, it's still higher? But did it turn around there? No. It in fact goes a little bit higher before it turns around. And who can tell me why? Who can tell me why? This is the original sell area, the original sell signal, because this is the first time you get an opposite. But the sell doesn't occur there. Okay, we got one person with the answer. Who else? Who else? Anyone else? Very good, very good. Okay, so you guys are getting the idea. This is a traditional stop hunting method. Okay, yeah, the big money is waiting for you. Now, just look at it this way. Look at it this way. Here, let's say you don't see, okay, I'm going to remove this chat box. Let's say you don't see that spike up. You see only this. What do you look at this as? What do you look at this as? Okay, resistance, exactly. You look at it as resistance. You look at it as this is my double top, this is my resistance, this is my threshold, this is my area where if it goes above, it's a breakout trade. I'm going to buy. So, two scenarios. Scenario number one, breakout traders are waiting to buy if it goes above. If it goes below, they're getting ready to sell. That's the breakout traders. Number two, support and resistance traders are like, aha, perfect spot. I'm going to hit the sell button right now because it came together with my candle formation, which is a inverted hammer, a hammer exhaustion candle, whatever you want to call it, pin bar. It has a candle formation also telling me that it's bouncing off of my resistance area. So the people who are waiting, okay, let's put them aside. They're waiting. The second batch of people who already are selling, where do you think they keep their stops? At the most logical price action place, which is above recent highs. That is the optimal place to keep your stops in any situation. So just like what they're taught in the textbook, the stops are kept here. If you keep your stops 50 pips above, trust me, you're going to make money, but you'll never be able to grow out of your account balance. Okay, take it from me who studied money management in and out. If you cannot control your risk, you will never go outside the balance you put in your account. You will always be in that range. Okay, if you want to scale higher, you have to identify what is your risk so you can know when to scale. If you don't know that, it's going to be tough to scale. So now, as this happens, they see the divergence also. Now, even your indicator is in the oversold. Even your indicator is in the oversold area. Okay? Now, when an indicator goes in the oversold area, we're adding in two more pieces of traders. What more pieces of traders we have? We have indicator traders who are basing all of their decisions based on what the indicator does. And we have one more very popular group, EAs. Okay? Expert advisors, robot traders, who immediately execute a trade based on conditions when they're in the oversold area. Given, yes, they're a little bit more complex, they have 50 more indicators to mess up their mind also. That's fine. But they all happen around this soft initial profit. And maybe I do that. Okay. Let me know when you guys can hear me back again normal. Is that better? Okay, I'll do my very best to not move the screen when I'm speaking. So continuing, moving forward. So a lot of stop huntings are happening right here. Now you may be wondering, okay, stop hunting is my broker. That broker is always stealing my money. Well, it's not the broker that's always stealing money, but the fact is this is how the market works. Okay, this is an everyday business. It's a general way that the market works. If it were really that easy, then there would be no market. It would be parallel. Okay, so there needs to be an edge always. Okay, now moving forward. So all these stops get taken out, and then it's breaking again. I'm so sorry. I don't know why it's breaking in front of it. Let's try Seattle. Okay. Can you hear me now? Yeah. Okay. Hopefully that works. Okay. Dave, does it work better on any particular time frame? No. You can. Sorry. The answer is no. Yeah. Basically, you can use this across any time frame you want. Okay. I don't recommend trading smaller time frames. In my personal opinion, if you're trading smaller time frames, below 15 minutes on the forex spot market, it's a very lonely and dead world out there. Okay. Anything above that, you'll be okay. If you want to trade smaller time frames, move to futures. Okay. All right. So looking further, zones only after a sudden push. Now, put it in there. Okay. Let's see. Now, I'm going to show some stuff to you guys, and you guys are going to say yes or no to tell me if you guys have spotted the opposite. Okay. Do we have an opposite now? Do we have an opposite now? So now let's examine this. Let's examine this. Okay. What does this mean? Yeah. The answer, Sunshine has it correct, and Ian, you also have this very correct. It's not in the most oversold or overbought area. It's in the middle of the range. Okay, you can see here, it's from here. It's not from the outputs beyond lines. Okay, if you're worrying about my settings for this indicator, I always, if I have to use divergence, I use standard indicator settings. Okay. All right. So yeah, it's not an extreme area. That's correct. Now, take a look at this one very carefully. Where does this opposite actually begin? Okay. If this was your high for where it began, right there, did price ever breach that high? No, right? Let's do the same thing with the indicator. If this was your high for the indicator, where did the indicator breach it? Right there, right? Let's put a line right there. So practically, this is the first area where you see a divergence take place. Because you get to connect. Same thing with your indicator. You get to connect. Oh. I will try to speak a little bit slower, and I will try when I speak. Okay. Now, when you see... Okay, I put a red arrow on the screen. Okay, when you see that red arrow, take a look at where that's the first area where you noticed that the opposite has taken place. Okay? But you notice the market doesn't drop from there. It doesn't sell. It starts to go down. Okay, but it doesn't really go down. It does one more spike up to take out everybody. And then it drops. Okay? The killing begins. Right. Let's change the pair. Let's try, let's say, CAD yen, some exotic pairs. Shivani, no, it doesn't always mean selling. You can also have buy. I'll get into the buy. In fact, on the same screen. But you're not in the oversold. Why not the other top? Which other top are we talking about? This one right here? Down here? This one? Okay. Vandermeulen to the left. Okay, so you're saying why not this one? Or do you want to go further? Okay. Okay, let's continue into this. Let's continue into this, and we'll get back to the questions towards the end, so we don't get lost here, because we're already having audio problems here. Okay, so we see that there's an opposite here. Where's the first place you notice the opposite? Take your line, make it straight. You'll get an idea. Do the same with your indicator. That's the first spot you notice this thing had an opposite. Right here. That's the best way to spot it, because that's the first time you'll actually see it. Maybe one or two candles later you'll see it. And in your head you're like, whoa, it's an opposite. It's a divergence. I must hit the sell button right now. It can go any minute. But the reality is it never goes the moment you spot it. Okay? The best thing to do is find it in conjunction with stuff. Okay? So step number one. Is everyone understanding step number one? The oversolds. Okay? We're going to go over each step with examples. So step number one, when you're looking for oversold areas, they tend to have the best risk-reward with them. Show you a proper example here. There we go. There's an oversold example. Not the best one, but there's one. Okay? See that opposite right there? Indicating a reversal in price. Now, one of you guys had a question about, is it always sells? Can it be buys also? Of course it can be buys. Take a look at this one. Swing low to swing low. Why am I choosing these two swing lows? Because on the indicator, you also have swings at that same moment. Okay, I don't want to choose this. I put a circle on my screen. I don't want to use that swing low because there's practically nothing there. Okay? And in reality, that's not a swing low. Yeah, the accuracy of divergence is pretty consistent. Now, whether it goes in your favor, it shoots in your favor, or it crawls in your favor, can make a difference. No, I'm in the same location. I don't know why the internet is bad. One should be a little. It's not the best quality one now, but can you hear me? Is that better? Okay. Okay, so let's try this one then. Okay. All right, so whenever you take a look at your opposites, you must always understand where did you first spot it. And the way to do that is bring your line parallel. Make it flat. And you'll understand where you first see it. And it's this red candle. Okay, good for now here. Is there a divergence on 15-minute Euro USD? Okay, how about this? Why don't all of you guys take a look at Euro USD on the 15 minutes and you let me know, do you see an opposite? And I'll confirm with that to you immediately in a moment. Okay, why draw the vertical line? Okay, we'll get into that. Yeah, I always love to show live examples if there is any. Let's see if I can find one. But I think we should go over the trading examples on the second session. I want to make sure everyone understands the opposites first. Okay, so give me a 1 if you see a divergence on 15 minutes Euro USD right now, and give me a 2 if you do not see one.